Welcome to Momentum Monday. Today is August 13th, 2023. Howard, how is the skiing in Aspen?
I'm gonna tell you, I've never had a better skiing day. Um, it's beautiful. I drove here today from Steamboat Springs. Have you ever been to Steamboat Springs or any in Colorado?
Never heard of it, never been to Colorado. So,
It is lovely. Um, Highly recommend Steamboat. It's like a off the beaten path, beautiful place. And today I drove 3 hours to Aspen, and I'm cycling with some people in the industry in the cycle. It's a really good cycling group. So today I rode with some people that have won stages in the Tour de France. So it's kind of cool to they're just regular people like you and I, except machines, and so it's
yeah.
fun.
Is there a
Yeah.
stock that you can play cycling with, like a publicly traded stock?
You know what? That's a great question. Uh, no, but I imagine e-bikes are going to be. I imagine somebody in the auto business, maybe even Tesla, gets in the e-bike business. Let me just think through that. There's a lot of private equity, Canyon, POC helmets. There's a lot. It's not a massive. It's a massive industry, but I think it's a lot of private equity out of it. But good
Okay.
question. I don't know if there's a pure play. There is one in golf, GOLF, which is another interesting industry. It kind of looked like it was going to break out to all-time highs, which I didn't.
It did, but it was a false breakout. So it's,
Yeah, false breakout. So that's actually interesting in the sense
yeah,
that
look at this trend.
they're a conglomerate of hardware and Titleist soft. So they have soft goods and hard goods, and I think if they could ditch the hard goods, I think it'd be a better business. But it's been a great company
Yeah.
and a great stock. But you see that false breakout, Ivan, is kind of what we're seeing in tech too. So why don't you walk us through what we're seeing?
Yeah, I mean, the stock markets are currently in a correction mode. Interest
Yeah.
rates continue to go up. Uh, Treasuries are near multi-year lows. The 10-year
Ooh,
yield, a little bit above
ooh.
4%, is a multi-year highs. Obviously, if you go all the
Oh
way
my
to like
goodness.
the
Yeah.
60s, late 70s, you see that the 10-year yield used to be like 15%. And since that,
Yeah.
kind of pulled back. But if you want to go to like the same 4.2%, you need to go like almost all the way to 2007, 2006. So
Yeah.
definitely a big increase in interest rates, which is starting to weigh heavy on tech stocks, especially high beta momentum stocks, companies that are not really profitable and that are burning cash.
Yeah. We saw that, Ivan, like all those ones that are unprofitable just got killed finally. Carvana, Upstart.
Yeah,
Um,
I mean, most of them after earnings, but not only. So yes, why is this not? Okay. So as the S&P currently is down only 3% from its 52-week highs, the Nasdaq 100 is down about 6%. We're seeing a lot of those high beta stocks down 20, some of them even 50%. So already those 2 weeks in August have brought a lot of damage under the surface. And as we know, August, September, October, in a pre-election year, seasonally weak. So we might see a little bit more of that, more chop and more correction. In general, distribution days are just piling up on the Nasdaq 100. It closed below its 50-day moving average
yeah.
for the first time since early in the year.
Yeah.
So definitely some signs of weakening in the market. And the only two sectors that are kind of benefiting from the rotations are energy, which has been pushing higher, and parts of healthcare. I mean, energy is building a big base here, um, and select healthcare stock, which is typically very defensive sector in
Yeah, and I
general.
would add in a way war, right? Uranium, um, Camco. There's like a lot of these uranium stocks are hitting all-time highs. I think it's Camco, CMJ maybe?
We'll find it. But
Yeah, it's not important. I'm not trading uranium, but yeah, it's some of these uranium stocks are hitting.
yeah, we'll find it. So CCJ is the Camco. Yeah, it's near multi-year highs.
Yeah. So
And
the war trade, there's like listen, in 2023, it makes sense that the war trade would be, Oppenheimer movie came out. It's just, what are people going to worry about this time now that China's not trying to kill us is global thermonuclear war, right? So uranium stocks are creeping.
I mean, they're part of energy, so the entire energy sector, even like coal and stuff, has been breaking out.
These coal charts, like they cut that ETF KOL like right.
Exactly right before the biggest move in their history, probably.
Yeah. So this like consolidative energy, JC was sharing. That's just incredible. Like it's the only way to be long coal.
Yeah, there are just a few other coal stocks, but yeah, there's Arch, I think, is another one.
Oh my goodness.
There are a
These things were
few.
like penny stocks.
Yeah, I mean, pretty much. So, yeah, the market
It's
has
like how
just
many
been weak.
media mentions a day does Kathy Woods get versus like coal? And uh and if you look at like coal over the last 3 years versus like tech, it's
Coal.
like
I don't think there's no ETF. It used to be KOL, and now we only have a
the joke of it is you can't even buy most portfolio. I'd say like the world has been telling you, like stock prices have been telling you. Can you hear me, buddy?
yeah. I mean, you got interrupted for a second. Like your voice disappeared for 20 seconds.
Oh shoot, maybe my internet connection is so. But it's funny because you can't even buy coal, and everybody wants to buy unprofitable tech stocks. And for the last 3 years, it was like there was a quiet, you know, materials trade and whether even steel stocks like so it's really interesting. The lesson here is like you have to follow price relative strength, and a lot of time you get tricked because there's tech is so big that there's a lot of price relative strength. um, but if you dig below the surface, there's a lot of price relative strength that no one talks about, and those stocks tend to do even better. So it pays to kind of scan through IBD and price relative strength for some of these companies that have profits and earnings that no one cares about on social web or talks about on
Yeah.
CNBC.
So that ETF cows, which is like company that have high cash flow yield, it's at all-time highs. I mean, if you look at its top 10 holdings, I think 7 of them or 8 of them are energy stocks, and then you have Booking and then a few other like names, but like mostly boring businesses. Like, so it's really interesting to see them.
What was that ticker, Ivan? That's cool. Cows. Exchange trade season.
KOWZ.
It's a cash cow 100. That's so interesting.
Yeah. Kind of close. I think it's all-time highs, basically.
Yeah. And basically a double off the lows of COVID. Yeah, interesting. So there's a million products out there that you can follow that that you can express the different markets around. I personally think it's just like the unprofitable tech was getting silly. Speculation continues to run rampant when over the most silly ideas, but that's we went through a bubble, and is at all-time highs and getting rejected. Wow, Kathy, that was a big pullback in Kathy Woods, but I guess she's unprofitable tech. So
yeah, I think she sold.
So basically, no progress.
Her entire Nvidia position just before that big move this year. So I mean, everyone makes a mistake. But
yeah, stock picking's hard. I mean, in the end, that's why most people can be an SPY and QQQ and just continue to outperform. So what looks interesting besides Energy Island? I don't think there's much out there that looks
On the
interesting.
long side, I think is basically energy. And then if you really want to be active, I would say on the short side, most of the high beta, high momentum stocks have been under a lot of pressure, and then you may see some of them just continuing.
Yeah, that had looked like Fortnite had looked like Ivan like one of the strongest stocks, and then kaboom.
Potentially lower, like even Netflix, I think is looking vulnerable here for a pullback to 400. And Nvidia, they're due to report August 23rd. I think very likely for them to test 400 this week. And I think we have 5 minutes on Wednesday. I think nothing goes straight down, so we might
I
see
think that's the start. That's it.
a lot of chop.
That's probably the stock to follow this week, right? Because if that fills that gap,
The next
all those
week,
people
yeah.
that all the people that threw in the towel and just went long after that gap, that'd be a hell of a gap to give up.
Oh yeah,
I
this is a big level here, the 366
know a
level.
lot of people are just like, all right, I'm just going to own NVIDIA. That's, the one. And they paid above 400 saying it's a blind bet. If any kind of hiccup, and that stock quickly could be 300. And now people are down 25% on what they said they were going
That's
to hold.
nothing. If you move up to 100%, it's normal to have a pullback of 25-30%. Obviously, now it's not page 10 news. Now it's page 1 news. Everyone knows about NVIDIA and AI. So it's kind of hard to extract alpha from something that is so popular and well known. But we've seen irrational moves last much longer than what people expect. So anything is possible.
Yeah, I was looking at some of those stocks that I kind of got stopped at. Look at MRVL, right? Same as NVIDIA. It just kind of
I mean,
gave
all
back.
the SMH, all the semiconductors kind of highly correlated. They move together.
Yep.
You see SMH definitely having like, what is it, like 10%? Yeah, 10% pullback from its 52-week highs. Was rejected, in its all-time highs. It's completely normal to pull back even to 140, even 130, and just build a new base here.
Yeah.
Over time. So yeah,
And is there, besides NVIDIA, anything big else this week?
No, NVIDIA is reporting earnings in 2 weeks. Obviously, we're still
2 weeks.
earnings season. We have the Fed minutes on Wednesday, which usually brings volatility to the market. I think many stocks are still looking vulnerable. Wouldn't be surprised if we see some further downside, but in a very choppy fashion. Like last week, we saw, let's see, we would see a gap down, and then the market would rally and just shake out the shorts, and then we see a gap up, and then the market would sell off, shake down the new bulls. So there is just in general a lot of choppiness in the tape. So unless you're really nimble and short term, it's kind of hard to navigate. It's not really worth the effort to really swing trade it. It's like if you're active, basically to make money, you need to be like mostly intraday in this type of tape. At least this is the way I look at things. This is not like an easy trending market that we had in May, June, July, where the way to approach the market was swing trading, not day trading. And now we're kind of in a day trading mode. If you want to be active, you don't have to be active every week or every day. You can just, there's some times that you can just observe and protect your capital, protect your confidence, and wait for the next trending tape. But that obviously approaches the market differently. I'm just sharing how I see things.
No, you and I just jogged on the beach. We talked about it. And Trends with Friends with JC and Phil, like 3-4 weeks, we just have been like, I mean, the trade's energy, JC's. If you gotta own stuff, how are the financials holding up with rates?
They're not going that great. Obviously, the big ones are not having big pullbacks. Like
it's like
JPM.
right there.
JPM is holding well, but Goldman Sachs is having a much bigger, like a bigger pullback.
So I don't know. There's just I think there's no rush to do anything. I'm on the defensive lately.
Yeah, it would make sense. I mean, for someone like you, I think it completely makes sense to just wait for your Fed pitch and just make your move. You don't need to go to work in the stock market every single day because not every single day provides the same opportunities.
Yeah,
Some,
that rate trade, Ivan, is crazy. It's the longest bear market in bonds in history.
yeah, it's pretty crazy how
I don't think people understand it because they don't
the
look
implications
at
could be
interest rates.
severe over the next few years, not just for this year, as this increases the cost of everyone, not
Yeah,
only the US government and all the states and the cities, but also of mm, many citizens and companies are highly indebted, credit cards and other loans.
yeah.
So it's definitely higher interest rates are will have an impact on the um, overall spending power of people and of companies, which obviously will have its effect on the economy down the road. Obviously, we'll see that in stock prices. Some companies will benefit, the majority are not.
Yeah, we're 3 weeks away from students having to write their first check in a while for their debt, too. That's going to cast. That's You're not hearing about it in the news quite yet because that's the way the news cycle works. But mark my word, by September 1, you're just gonna every front page is going to be cover stories of kids whining that why do they have to pay? Never thought I'd have to pay again. That's the way the media cycle works. So the market could be reacting to that right now. And again, everybody's always looking for the next bear market. So the worry is good. The problem that I see is rates. Like, I don't know. I haven't lived in a I haven't invested in a rising rate environment, and I'm an old person. So we're still at low rates relatively, like historically, but
Not
they're
that long,
rising.
but yeah,
But they're rising. And if you would go to the gas station like me, fucking oil is expensive in California. Gas prices.
$6 almost to.
Yeah, and you can't just be in California and not drive. So it's like one of the biggest economies in the world. So there is inflation, but there is money. So I don't know.
Oh, there's so much liquidity. Like there was so
Yeah,
much liquidity pumped into the economy
yeah.
during COVID around the world that basically every correction that we see in the market will probably end up being a buying opportunity at some point.
Yeah.
Obviously, don't just buy blindly, wait for setups, but there's still so much liquidity. It's really hard to
So
be
much liquidity.
very long term with
Yeah.
that.
So I think what we're both saying is probably not the best time to make any big uh, commitments to anything. If you got your positions on, you got your positions on, but there's going to be better pitches out there. But energy seems to be the pitch, defensive, I guess you're
That's
saying.
how it looks like, yeah,
Yeah.
so far. I
Yeah.
mean, energy, they're not really big movers, they're big slow movers, boring companies and businesses, but that's where these are the only stocks that are kind of still holding
Or
above the
Chevron. JC was talking a lot about Chevron.
CVX. Yeah, let's see. I mean, it's just still below its 200-day going sideways, like nothing sexy to me unless it breaks out
Yeah,
above it. Like
nothing.
there are stocks that are looking better right now. What was the one that's Oxy that Warren Buffett has been acquiring, looking better already above the
Yeah,
200.
got below 60 his buying point, and then it's just
So yeah, so
supposedly just
there are
buys it
definitely
every
stocks
chance.
that are doing better than Chevron, like this one,
Yeah.
this big, big uptrends for a while. I mean, it's up like what 8 times since 21. Was some more APA stronger? It's back above its 50-day. Murphy
Yeah,
Oil.
four back.
So there are a lot of oil stocks that are working on new bases. But like I said, these are really slow-moving, boring stocks. They're not for everyone. You need to have more patience with those.
But the way these bull markets work, Ivan, this could go on for a while. And I'd like the tech people switch to this in a year or so because they become price trend followers. So remember, like these bases could lead to big moves. Again, not the triples and doubles that you're used to seeing weekly in tech, but you know, I don't think you need to be a hero in tech here. There's too many breakdowns, and you've got all that price knowledge at
Yeah,
recent highs that kind of broke down. Google's my favorite of all of them because they've been
yeah. Holding definitely better so far. Amazon too.
Amazon holding the fangs are
Really,
holding because
yeah,
they're cash cows, right? Like goes back to that
exactly.
cows
They
and eggs,
are
right?
both
Like
of them.
they're
Uh,
just cash cows.
yeah.
So they kind of have everything. All right, buddy, have a great week.
All right, have fun, Howard.
Get back in San Diego next week and we'll hit a run.
Yeah.
See you,
See you
everybody.
next week. Bye.